Hello, good morning, everyone. Hopefully you can hear me all right. Good to see you here this morning. Another Wealth Coffee Chat. Welcome along. Good to see a few of the early birds up and at it. Who we got in the house? We got Lena, Jeff. Yeah, mate. Aaron and Dean already here. Great to see you, folks. Thanks for joining. Hope you're all awesome and well. Been traveling over the last few days, so been a bit MIA, but all good. Back at it now, so hopefully we can get the old Wealth Coffee Chats back on track. Hey, morning, Luke. Yeah, well, that's good news, Luke. And that's the rub at the moment, isn't it? Navigating this this challenging time, certainly when it comes to construction, and how we can navigate that as investors. And on the other side of all of these challenges and problems are opportunities, depending on how you look at things. And we might just have a little bit of a talk about that today. Great to see you got through and got your subdivision done, Luke. A great way to add value to your portfolio, folks. Development and acceleration strategy. Well done, Luke. That's good. So thought we might chat about that today. Most of you know this, though, but I'll do the quick intros as we do. Jason Witten is my name. If you didn't already know, now you do. Say a quick hello in the chat if you're new or you haven't been here for a while. So there you go. Good morning, Andrew. How you doing, mate? And Srikanth, morning. How are you? I'll put Airbnb on the radar, mate. Tune in over the next week or so, and I'll make that one happen. I'll get one along one of our team in our 6-star team who run the short-term stay activities for us here. Many of our clients get quite a good return on that. So yeah, it's not a bad strategy to boost your income and make sure that you get a bit of extra cash in the door at the moment, folks, because unless you're living under a rock, interest rates are up and you got to do what you can. So great to have you here this morning, team. Let's talk about what's going on out there in the world of, put it up. There we go. So, in the world of construction, in the world of building, there's a fair bit happening, and we need to understand what is going on and how it might affect us as property investors. Morning, David. Morning, Facebook user. You're behind the veil, I think. You're behind one of the groups there. Morning, all. Thanks for joining. What is going on out there? What are the stats showing? And, what do we need to know? What do we need to pay attention to as investors? At the moment, we saw in the COVID times a bit of a spike. Well, not a bit, a large spike in our approvals and mainly housing. The apartments and the apartments and housing went down in 2017. Many of you know what that was. What happened in 2017 was the APRA, in all their wisdom, decided that, we don't believe we should, we don't believe we need supply in this country. Let's just ruin the ability for people to borrow money and choke supply, destroy supply. Now, COVID didn't wreck our supply, folks. COVID didn't wreck our supply. APRA did. And there were some few other stupid, dumb government decisions a few years ago as well. But that's not what this morning's about. Morning, Justine. Thanks for joining along. Great to have you here. Listen, supply chains are down. Construction of property, residential real estate is down pretty significantly. Approvals, however, were up in COVID. The challenge was, if you have a look at this, since February 93, if you have a look at sort of a peak here, we busted through probably the most approvals we've had since in one short year, than we've had since this chart has been tracking some of that stuff. And what was the challenge, team? You guys have heard me talk about this before, because I'm not going to labor on about this morning, but I'm going to make this point. The population in 1993 was, I think it was 16 million. I did this the other night. And then what was the population in 2023, right? 25 million, 25 or 26 million. So, in this section here, we think, oh, we had a peak, we had a spike, maybe that's good. Well, not really in comparison to the number of people we've had, grow in this country. So what's the challenge? What's going on right here now? We've had an uptick in approvals, but are we getting that going as commencements? Well, it did kick in. Some of those commencements have kicked in. The challenge, though, which has brought a bunch of builders undone, is the world of inflation, the world of construction, the world of labor, et cetera, et cetera, et cetera, right? So it's actually caused a massive drama out there in the world of delivering this stuff. And sadly, we've seen a bit of a disaster. Well, not even a bit, an absolute disaster play out in the construction land when it comes to building houses and apartments. Very sadly. As property investors, we need to understand this will affect the market that we play in, but also it might, if we're on the right side of this ledger, it actually sadly might give us a boost for some reason. And I'm going to talk about that in a minute. So commencements occurred, but now we're well down. And this trend is heading down further. The commencements of property is heading down further. And the one that supplies the most properties to the market is the commencements of medium density dwellings. Apartments and townhouses is on the decline a lot faster than houses, unfortunately. And for us as property investors, that's going to, constrain supply, which is probably a good thing. And you can see this here, folks, overall national dwelling commencements, our house commencements, total commencements, unit and house down. And around the country, why is that occurring? What's going on? Why is it? Because, and also private stuff has dipped as well. We've got a couple of things going on. Interest rates certainly are up. Interest rates up 12 interest rate rises in a row. And that means people can borrow less. At the end of the day, two things are occurring. Interest rates are up, meaning people can borrow less. And for all of these pre-construction properties that are off the plan, properties that are house and land, they need something to get them going. What do they need, folks? Put it in the chat for me. What do they need before the builders or developers can get going when you've got, 10 townhouses, 20 townhouses, a block of 60 apartments. What is it that that developer or builder needs before they can get going? Well, there's a bunch of things, obviously, but the main thing, they've got their, boom. They've got their approvals done. They've got a builder lined up. But at the end of the day, if they cannot, cut some red tape for sure. If they cannot get pre-sales, if they can't pre-sell, boom, Sharon, if they can't pre-sell a certain amount of their development, folks, their property, I'm with you on that one, Brett. If they can't pre-sell enough of their property, then the property will not get out of the ground. So over the last 12 months, we've had 12 plus interest rate rises in a row. The average person, we've been doing this for ages, Ma and Pa, could borrow up to 800 and now they can borrow 500. So in the meantime, what's happened, the interest rates have gone up, but also construction costs have gone up. Labor has gone up. So many of these projects that were over here in this approval stage, folks, sort of, over here going, yes, in 2020 or 21 or 22, they were all getting approved and, let's lock it in. The challenge when you've come to sort of late 22 and 23 to launch this project, well, you can't afford, you haven't sold it for enough. So even if you did get pre-sales, you probably now haven't sold it for enough. The construction costs have gone up. Interest rates have gone up. People can't buy it, et cetera, et cetera. So stuck between a rock and a hard place, because from an approval to commencement, can sometimes be, 1 to 2 years in a project, folks. 1 to 2 years in a project. And in those 1 to 2 years, the marketplace, the landscape has changed significantly for our builders around the country. And this is where they've gotten stuck. And it's a very, very, very sad state of affairs. This is absolutely hideous. And I'm really fucking pissed off with the government that they've just thrown these builders under the bus. They're trying to blame the RBA. The RBA is not to blame. It's the politicians. They've shit the bed on this one. And plenty of things, to be honest. A lot of things can happen in that time. You're dead right, Brett. So, here's where we find ourselves today. Right now, folks, we've got a gap. It's massive. It's starting to get bigger and bigger. And this decline in deliverables, this decline in actual properties, brand new properties coming to market, is going to only get worse. There you go. Sharon's one of our awesome, amazing coaches. And it's 30 to 40% of borrowing power with 12 rate increases. There is some silver linings on the horizon if you understand what you're doing with your borrowing. So make sure you check in with your coach about that, folks. But here's where we are right now. Here's where it's led. These a series of absolute stupid decisions by government. Dead right, Sharon. Have led to this issue we have right now with our builders. Insolvencies and restructures have hit the highest monthly level in more than 7 years. Now, I love how these, I love how these newspapers write these things, because they're like, oh, wow, mortgage cliff, and like the highest monthly level in more than 7 years, right? Monthly level. Now, there might be some facts in here. There might be some things to pay attention to. There's no doubt. There's some details in this that we need to understand, right? Like, they'll check this as business collapses spread beyond property. You think, oh, shit, it must be a disaster out there. Tell me, in the last 10 years, folks, put this in the chat for me. What do you reckon? Give me a sort of a something that happened that might have meant like business collapses everywhere. When was the most, what year do you think that business would have collapsed? Like the worst insolvencies in Australia ever. Like, where do you think, I wonder what happened? Was it COVID? Was COVID the biggest insolvency collapse Australia's ever seen? Was it the mining bust? Was it the GFC, Brett? All right, well, you think, all right, well, let's check this out, because this is an interesting thing when we do this, when we look at what the media is talking about and then the real stats. We'll dive in a little bit deeper, It's our job, team, to dive a little bit deeper into the facts, right? And goes, what's real? What's noise? Let's see. Let's have a little look at some of this stuff. So here is some stats from 2000, from ASIC. Well, interestingly enough, COVID was the lowest. COVID was the lowest, we'd had since 2000. So less companies entered administration, which was good. The government put a pause on things, etc. Great. You'd think, all right, over here, this was the GFC, 2009. Yeah, Brett, you're dead right. That was a bit hairy. Here's the the mining bust, et cetera. So it's interesting. In sort of those years there, it was quite high, wasn't it? It was like, okay, lots going on. What happened there, etc. But right now, at this moment in time, it's not up there just yet. We've obviously got another 6 months to go in this financial year. But, where is it focused? Where is it happening? Well, unfortunately, very sadly, it's the highest number of liquidation appointments that the construction industry has seen for a long, long time, if not forever. I'll find out some stats on that one. But 2,032 in the construction industry, 1,000 in the accommodation and food services industry, and unfortunately, retail and manufacturing, et cetera. So, as property investors, that's going to affect the supply chain significantly, folks. For you and I, how long is it going to take to recover from that? Like, how long is it going to take recover from that? Our supply chain is low. Supply for residential real estate is low, if not the lowest ever. The flip side for us all, folks, is that, what will happen if that continues? It's going to take at least 5 to 7 years to recover, folks. That's what it's going to take. I don't think it's going to recover very well. The government is boosting and chucking money at big corporations to do not buy to rent. I'm having a mental blank. Someone put it in there: rent to buy, or build to rent, right? So, and you guys have heard me talk about this. That build to rent bullshit is going to take supply out of the market for it's going to take money and supply out of the market for everyday people to buy a property to own, right? What's going on? Okay, well, let's get some rent for people. Let's get some rent relief. It's not going to relieve rent. Those properties are going to be good quality anyway. They're going to still be high rent. Anyway, that's not what I'm talking about today. Anyway, team, our supply is under huge pressure. I don't think it's going to recover for a while. For all of us as investors, the only thing right now that is our kind of the thing out there is the interest rates, right? Late 24, 25, we're going to see those interest rates come down a bit. I thought it was going to be a bit earlier, but the government is continuing to be a bunch of muppets and doing inflationary things with their policies to try and stay in government, which is so stupid. But there you go. Challenge, we've got over 2,000 of our builders gone broke across Australia. That's a national disaster. It's very sad. The government's doing nothing about it. They're a bunch of muppets. What that means for us is the pressure on the supply chain is only going to stay there. And by default, our values will rise. And by default, our interest rates will come down at some point. They have to unlock the borrowing to unlock that market. And also our rents will continue to rise. That's my takeaway from that info, that data team. Hopefully, it's not meant to be a negative, this conversation. It's meant to be just a notice. It's meant to be like, that's where we are. What's the upside? What's the downside? What do we need to be aware of? Where are we at? As investors, that's our job. We need to understand where are we at and as we go. Yeah, it's interesting. It's difficult to get some information about that's probably true. It's difficult to get some information on startups and what they do in the business world. What we do know is that there's been 27 large-scale building collapses or builder collapses in the country when it comes to delivering homes or restructures. So it's a thing that we need to navigate as a country and as property investors, and be on the right side of the ledger, folks. There you go. All right, team. That's right, Trina. And really, the takeaway is, don't be terrified by it, folks. That's really, really the takeaway. It's a good reminder. Thanks, Trina. The real takeaway, folks, is look for the opportunity. All right, as we go along. Opportunity is always important to sort of look at both sides of the coin. There'll be opportunity for builders. There'll be opportunity for new businesses. There'll be opportunity for property investors. In this thing too. So there you go, team. Hopefully that was of use this morning. Always great to have you guys here with me for a wealth coffee chat in the mornings. It was great. There was a couple of suggestions about some things for the future for the Wealth Coffee Chats. Thanks for doing that. Always great to have you chuck in the chat what you might want me to talk about, and I'll put Airbnb on the radar for you. Siranth, and we'll see how we go. I'll get along a guest for you or something like that. Anyway, folks, that's it. Done and dusted. Join me tomorrow for another chat if you're up for it, 8:10. Till then, you guys take care. Bye for now. See you, team.